Aussie mortgage holders are waking up very relieved this morning after the Reserve Bank decided to slash interest rates for the second time this year. The RBA lowered the official cash rate to a two-year low of 3.85%. Minutes later, the big four banks announced they would pass the cut on in full. Thank goodness for that. For more, we're joined by economist Evan Lucas, live in Melbourne. Great to have you with us again. So millions of Aussies, they've been waiting for this one. How much on average will each borrower save per month, do you think?
Morning, Sherbo. So they're going to save roughly about $100. So the average mortgage in Australia is about $660,000, and that's on top of the about $80 they were saving from the cut they got in February. So far, it's a pretty decent saving, just on or under $200. And the expectation is they'll probably get to save more by the end of the year. So overall, if we get one more, it'll be about $3,300 on the average Australian standard mortgage.
Geez, that's going to make a big difference, isn't it? Especially at the moment.
Big difference.
What about on the other end of the spectrum, though? Because it's not good news for savers.
No, it's not good news to savers. I mean, that's part of the way it works. Unfortunately, they are also based on the cash rate. So they will see their term deposits, debentures, or their cash money products of some description probably declining by the same amount. So if you are, let's say, have a term deposit of $100,000, that's $250 less per annum to go with what also happened at the start of the year. So there is always, unfortunately, a loser, but it's what, 2.1 mortgage holders to every one person that has a term deposit. That's what the bank has to look at.
There's still some headwinds, isn't there? So Governor Michelle Bullock revealed there were talks, though, that a double rate cut could have come this time around. Why do you think they went against that?
Probably the employment numbers is the only reason, Sherbo. So there is no doubt they know that the economy is pretty sluggish, that the inflation rate is back to where they want it to be. The employment numbers are probably what just holding their hands, whether or not it continues to increase wages and therefore put an upward pressure or a little bit of upward pressure on inflation. So that held their line, but it does therefore mean that the probability of one, maybe even two by Christmas really did ramp up. That second one now is actually now seen as a real probability rather than an outside prospect. Yeah. So two by the end of the year would mean a full 1% out of the cash rate for 2025. So
does that mean the end of the cost of living crisis by the end of the year then?
No, I don't. I think we need to remember that the cost of living crisis is still well and truly prevalent. I mean, we have seen that you look at still things like household goods, you look at staples, so things like supermarket shopping, they are still elevated. They're not growing at the same rate. So it's about taking the pressure off the cost of living. There's still a long way to go to get that back in check.
Okay, well, that's good news, isn't it? Evan Lucas, really appreciate your time. Here's Nat.